Hello again, it's John Hine, Compass Resolution, talking to Sir Mark Jones, financial advisor, in this fourth video of a 5-video series. And in this video, Mark, I want to talk about some of the kind of challenges or examples of challenges you might face when preparing your report. I mean, the first one I have in mind is this. If an ex-spouse has, for example, taken some pension benefits in the time since separation, how can that be fairly taken into account in a personal asset assessment for separation and divorce?
We've had a few examples of this just recently, John, where we've had values through for pensions and it didn't seem quite right. And what we've asked the parties to do is get a full transaction history for the last 18 months or since the time since separation. And what's transpired from that is that one party's actually taken some tax-free cash from a personal pension. Obviously, that doesn't come through as income in the year. So even if there've been a P60 declared to the other party, that won't show up. You're going to probably talk about full and frank assessment, but in some circumstances, maybe there hasn't been a full and frank disclosure. So if you're unsure that the pension benefits that your spouse is declaring looks quite right, then just get a transaction history and we can audit that and make sure that the value of the pot has not been tainted by someone withdrawing some tax-free cash.
And I guess that really applies, doesn't it, to correct me if I'm wrong, to those who are 55 and over, who are able to draw down on, for example, if it is a private scheme, if it's a SIP or something, then would you recommend in most of those cases where they are able to do that, that you get a transaction history?
I think only if one party's got, are unsure that the value that's being declared or the paperwork that we can see doesn't seem quite right. If they knew that pension was worth more beforehand, you're quite right. You can only access pensions from 55 now, and that age is actually getting pushed back forward. So by 2028, it'll be 58 by the time you can take pension benefits.
Well, thank you for that. I didn't know that. The other scenario I got is this, and again, it's equally important, and it concerns clients' ill health, and especially those where they might be terminally ill. Why is that important to the pension schemes to ensure that they receive that information in a timely manner, or their benefits, I should say, in a timely manner? Yeah.
Yeah, so if you've been diagnosed with a terminal illness and you've got less than 12 months left to live, then the schemes are able to pay you a lump sum tax-free. So you can get that pension out straight away, which from a pension and separation point of view might mean that your spouse gets the money in a tax-efficient manner. Or if you're looking to leave a legacy for your children, then obviously taking those benefits out before and during a sharing order is what you need to do. And also, if you're in receipt of a sharing order and you're not very well, if you've got limited life expectancy, then actually when we do our calculations around purchasing you an annuity, we'll use normal life expectancy in that annuity illustration. So let's say, for example, you're not well and you've been diagnosed, limited life expectancy. Actually, when we do your calculation for your share of your spouse's pension, we will use enhanced rates, so enhanced returns on those investments, which will mean you'll get more money from the share.
Okay, yeah, I understand. And that would seem fair enough. I mean, that seems a fair approach. Final kind of example I've got really for you, or one of the challenges, I guess, is, well, how do pension trustees and administrators avoid those kind of hurdles in a smooth and kind of timely way when it comes to the transferring of the pension sharing award?
So once you've got your pension sharing award, what I'd say to you is, if you're looking around to get a financial advisor or a pension specialist that's going to help you actually, take those benefits, don't wait. Take your pension sharing order and send it straight away to the final salary company or whoever's managing that personal pension that you've been awarded a share for, and put them on notice that you are going to transfer the benefits. Whilst you're in that process, then you can shop around locally, or you can use ourselves in terms of giving you some advice around transferring those benefits and setting up a personal pension. But it does take time. As soon as you've submitted all your documents into the pension scheme, they have under statute 4 months in which to have that money transferred to your new chosen pension provider. But obviously, if you wait a couple of months and then you think about it, then you try and appoint somebody, time slipping by, it can be up to 12 to 18 months before you actually get the benefits.
And in the meantime, does I guess that pension that you're going to have a share of will continue to grow, and therefore your pension share will grow by the time it's implemented? Is that right or wrong?
It could be, or actually when they do the new calculation, the value may have fallen. So in a final salary scheme, when the actuary does the new calculation, depending on interest rates and the gilt rates currently, your pension share that might have been, say, 220,000 may at that stage then be 200,000. Or conversely, it may have gone up. So, you know, whenever the actuary does the calculation, they're doing it on current rates. And obviously the economy, the way it is at the moment, could go up and could go down, especially with a personal pension. And if the stock markets have fallen during that period, then obviously you'll get less for your money than what you would have got prior.
No, very good point. And actually, you know, the subject of our last video, which is coming up very soon, very fast, in a moment actually, you know, we're going to be talking about, or you're going to be talking about, I believe, about what happens when the court has made the pension sharing order or the pension order. What happens then? Should we go straight on to looking at that for the final video? Is that okay with you?
Yeah, that's fine, John. Yeah, speak
Great.
to you soon.
I'll speak to you soon. Bye-bye.